Welcome to Financial Living. I'm your host, Jules Wilson. Get ready to take control of your credit, your buying power, and your future. And guess what? As we learn in today's show, it's a lot easier than you think. We all know the importance of really good credit, but how do we take control of it? Well, thankfully today we have Johnny Vu. He's the CEO of QC Credit. Johnny, how are you?
Good. Hi, Jules. Thanks for having me here on your show.
So glad to have you. Well, I have so many questions, and I hope I'm asking the right ones. If I'm asking a stupid question, tell me.
Don't worry.
Listen, well, let's just start with credit, the old infamous credit number.
Okay.
I've heard that the average is like from 350 to 850, but you know, what's too low and what's high enough, and oh my gosh.
Well, actually, there's a lot of scoring systems out there, but there's two main scoring systems that we utilize a lot. The first one that we probably utilize the most is for the mortgage industry, which ranges from 350 to 850.
Okay.
And right now, anything above 680 to 700 or above is really, really good. Obviously, the higher the score, the lower your interest rates are going to be, the easier the lender is going to be able to approve you. And the lower the score basically means you're more at risk to default on your loan.
Okay.
So that's where you're going to have a higher interest rate, or sometimes if it's too low, then the lender feels really uncomfortable, then they're not going to give you the loan, and that's where you're going to get declined. So the rates vary per lender, and the scores, depending on what it is going to depend on how the lender sees you and you know, give you a loan or not.
Okay. Well, you know, we all think California's the best state, right?
Yes.
But how do we compare nationwide on credit scores?
Actually, we're not that bad. Actually, the average score for California as of today is about 672.
Oh, that's good.
That's not bad.
Based on what you've just told me?
Exactly, not bad at all. 680 or above is considered very good. Well, actually average now. Back in the day, 680 or above, you do very well. Now 700 or above, you considered really, really good. So California, 672, we're doing really well for ourselves.
Okay. Well, I've often heard people or lenders talk about the 30% rule of thumb, but you know, what does that mean? 30%
rule of thumb. It's a very important rule that we should definitely practice every day in our lives. And what it pertains to is your credit card debt. So
credit card debt.
Okay, exactly.
All right.
Most people don't understand that when you use your credit card, the more you use, the more you lose. That's our little thumb of rule that we have in the office. So what I mean by that is, for instance, let's say you have a credit card limit of about $10,000.
Okay.
So 30% of that is going to be $3,000. So if you use more than $3,000, you're going to lose more points on your credit report. So if you stay under 30%, you lose less points.
No, even if I pay it off every month?
If you pay it off every month, then obviously you've gained those points back.
Oh.
But during the time where the balance is over 30%, your scores has been reduced to, let's say, 30 to 50 points even.
Oh, really?
Exactly. So having a credit card and utilizing it every day, it's a great thing, because you want to make sure there's some activity on it. But having a balance on it doesn't mean it's bad. It's only bad when the time you need it. So, so when do you need your report? Basically is when you're trying to buy a house, you're trying to buy a car, and when they run your report, they're going to see that balance. So what you want to do is pay off that balance 30 days prior to when you're going to be anticipating to run your credit report. Oh,
okay. If I'm going to be going for a home loan or a car loan or whatever it might be.
Exactly.
Oh, 30 days prior to, that's kind of the rule of thumb.
Exactly. So the bureaus have time to update their systems.
Okay. Now, what about closing off credit cards or keeping them open? How does that affect points?
That's the biggest mistake that a lot of people do, even now, and it's been one of those myths. Back 10 years ago, a lot of lenders and a lot of real estate agents even, unfortunately, they don't understand. They think by having 10 credit cards, you have so much access to all this disposable income, so you might tap it out and run away, for instance. So for instance, if you had 10 credit cards, each of them were, let's say, $10,000, so you have access to $100,000 of basically pure cash. You cash out all these credit cards and, I don't know, run to Mexico or something like that and live the rest of your life. And so from that thinking, a lot of lenders and agents back in the day, 10 or 15 years ago, had this understanding that since you had so much credit cards, that you need to close some of them off. But in reality, by closing off these credit cards, you're closing off a lot of your history.
Oh.
So by closing off your history, there goes your score.
Oh, okay.
So,
so if I have 10 credit cards, but I only use 2, keep those open?
You want to keep all of them open if you can. So,
but even if I don't charge on them?
if you don't charge them, even if you don't charge them, because if let's say you have one credit card that you had for for 10 years,
right?
And if you end up closing that one particular credit card, you've lost that 10 years of history that you established with that particular credit card. And on a credit report, history is very important.
Okay, well now you're making me think of something. So I had a credit card that was for miles or something, and I wanted to use a different card for miles, so I never use that one anymore. So if I don't. But I had it for about 10 years.
Wow.
So if I don't ever use it, how do I look good to a lender? Because how am I looking like I'm on the ball if I never charged it, I never paid?
Sure. Well, you want to make sure the card is active and used. So what I mean by active and used is once a year, you should definitely use it. It doesn't matter what you use with the card.
That's all I need to do once a year?
Just once a year, use it to buy gas, $10 or whatever you need, just to basically just keep it active. So just buy something, keep it active. The reason why it is that if you don't keep it active and you don't utilize that card, usually after 2 to 3 years, that lender will automatically close that credit card for you.
Oh,
and let's say you had a credit card that you've been using for miles for like 10 years. Now if you close that card down, you lost 10 years of history.
That makes me look good.
No, you've lost that 10 years.
But I mean, if I keep it open, it's making me look good.
It keeps you, especially if you're making your payments on time, your balances are low, you've never had any late.
Oh, okay.
And those 10 years of history has accumulated, and it adds so much more of a point difference when you have something that's you had history on it. But once you close that particular credit card, those 10 years are gone. You can't get it back.
Okay.
And you lost points on it now.
Okay.
Yeah.
Well, we've all been in a store or restaurant. The guy or gal next to you opens up his wallet. He has 20 credit cards. I'm thinking, oh wow, he's a big shot or successful or whatever. And I guess it's kind of true.
It's well,
as long as you're paying your bills.
Yeah, as long as you, but you know what? I wouldn't recommend walking around with 20 credit cards in your wallet. What if you do end up losing this?
Well, yeah.
A lot of people do. If you end up losing just for instance, your friend who has 20 credit, and I see this in women a lot. I've seen, they don't carry wallets, they carry purses.
Right.
And they have like 10 or 15 credit cards on there. And if they end up losing that wallet, those 10 credit cards, they have to close down.
Right.
Because they can't just keep it active, because if it's been stolen, someone's going to automatically use those credit cards. So they have to call in and close all these credit cards. Now they've lost all their, let's say 10 cards of 10 years of history. They've lost 10 years of history on 10 different cards. Their score could have been stellar at 700. Now they're down to maybe 500 just because they've lost all these cards and they had to call in to cancel it. Okay,
well, you're making me think of another question. So if I have a card, let's say for example I lose a credit card and I call the company to tell them, give me a new one, and they cancel out that one. Does that still count that I'm still a consistent?
Well, it counts that your old history is there. Unfortunately, when you open a new account, it gives you a new account number.
Oh.
And now, since that new account number is new, it's going to register with the credit report with only one month old, basically. You start the whole 10 years over again.
So losing a credit card is not a good thing.
Losing it's not a good thing. Closing it's even worse, because it's something that you've actually done yourself. So make sure you keep these credit cards open, keep them active, because after 3 years, once again, if you don't use it, you're going to lose it.
Okay.
So, and I wouldn't carry all my cards around. I usually try to carry maybe 2 or 3 around.
Okay, that's good advice.
And rotate them.
Okay,
so,
that's good advice.
So you can once in a while take out one of these old cards. What I usually do is that, let's say I had 10 cards, I'll carry 2 with me, and maybe once a year I'll take the other 8 out and buy some gas with it, buy some candy or whatever it is, just to basically utilize the card to keep it active.
Right.
But more importantly, once you use that card, try to wait for one billing cycle to pass by and pay it off. So what I mean by that is don't use it and pay it off tomorrow. Because the billing cycle hasn't really kicked in.
Wait till the bill comes, you mean?
Bill comes, you pay it off. Don't be late on it, obviously.
Right, of course.
And, to make sure that card is active. Otherwise, if there's no activity for a couple of years, the lenders will shut them down for you.
Okay, well, this is good info. I don't think people realize this at all, because I had a friend who she just said, I'm just not going to use credit cards anymore. A lot of people are using their ATMs for everything right now, right?
Exactly,
the debit cards.
Exactly.
So if I use a debit card all the time and I want to go buy a car, you don't get credit with your debit card.
You don't, unfortunately. And a lot of people have that misconception that, I use my debit card, since it has a Visa logo on it, that it should report to the bureaus. But unfortunately, it doesn't report to the bureaus. Only a secured Visa, a non-secured Visa, not a debit card, would be reporting to the three bureaus themselves.
That's really good. I have oh my gosh, this is really good information. I don't think people knew that at all.
Exactly.
Wow.
People do this every day. We see people every day that come to our office and they've closed down a credit card because they thought it was the best thing to do. One of their brokers or agents, because they were misinformed.
Right.
Said that you have too many credit cards, you need to close them down. But actually, the education has been improved in the last couple of years, and a lot of lenders and brokers and agents are actually educating the clients not to close up credit cards.
Okay.
Pay off their credit cards, pay on time, don't be delinquent, and utilize their credit cards so they don't close down.
Well, I know you've spoken to Wells Fargo and B of A before and a little bit of credit info, and,
Yes.
and this is really making sense because a lot of realtors don't even know this. So
Exactly.
I'm not yeah, that's just really good info. Well, what about and once again, talking about establishing our credit rating, getting the points as high as we can, right?
Sure.
What about old collection accounts? You know, when to pay off, when not?
The collection accounts are one of the only funky thing on a credit report. Most of the time, like we just mentioned before, that when you pay off your credit cards, your score increase. Unfortunately, for a collection account, when you pay off a collection account, your score actually decreases instead of increase.
What?
Exactly. What? It doesn't make sense. Why does my score increase when I'm trying to take care of my debt here and pay off a collection account?
So Johnny, what's the right thing?
It's actually, for a collection account, when it's over 6 months old, it's kind of in a hibernation stage. When it's in a hibernation stage, when you end up paying it off, you're basically waking up this bear.
Oh, geez.
So you reactivated this collection account.
Oh.
So let's say this collection account hasn't been active for the last 2 or 3 years.
No one's calling you, you mean?
No one's calling you. Exactly. And the credit report has been inactive for this particular collection account. They haven't reported or updated their system for about 2 or 3 years. Okay. And now tomorrow you end up paying them. The system has to report that. So it's going to show now if you pay them off, it's a zero balance, obviously, which is great. But now now the date is going to show whatever today's date is. So it basically reactivates its collection accounts. So the system picks up that collection as if it's a new collection. And this is where you're going to lose from 10 to 50 to 50 or even more points, depending on how bad or good your credit report is.
Oh.
So collection accounts is very tricky. So how to get around this when you're in the middle of buying a house?
You want to do the right thing. Let's say you want to sleep at night, you want to be ethical, you want to pay your bills, but you don't want to bring your score down to 300. What do you do?
So the only time that we recommend you paying off the collection account, and especially if you're buying a home or refinancing or trying to buy a car, is that you would do that at the close of escrow, especially when you're trying to buy a house.
But can you get the loan with a collection account? Oh, you mean it's been dormant, so it's not showing up?
Oh no, it's been showing, it's been reporting.
Oh.
But on the credit report itself, there's like a little section that says when's the last time this has been updated by the 3 bureaus.
All right.
So it will show there, and for instance, it will show that this hasn't been updated since 2005, for instance.
Okay.
And now if you paid it off, and it's going to have today's date, 2012, because it's been activated again.
Okay.
So that's where you're going to see this point reduction, because it thinks you have a new collection accounts in your credit report.
Okay, well obviously we all know it's never good to be late on any bill, especially a mortgage late, right? But how does that affect, I mean, I think for a lot of people it's a mystery. This point thing is like a mystery.
Sure.
How does being late on a mortgage payment or a credit card payment actually, what does that actually do to the rates? Is there a percentage that house payments or credit cards affect your FICO score?
Being late dates is probably one of the biggest factor in regards to your score and how it gets affected. And especially on a mortgage late, the more lates you have, obviously the more points you're going to lose. On average, for like a 30 days late, you'll probably lose about 15 to 25 points. On a 60 days late, which is now you're 2 months late, it's going to go over to about 30 to 50 points. And 90 days, that's where you're going to see from about 50 to maybe even 90 points. Obviously, the more you're late, it's a rolling late now, the more points you're going to lose. So for a credit card, you do lose less points, but obviously if you can, you don't want to be late on anything. But if worst case scenario happens, then maybe you should consider being late on a credit card if that necessary needs to be done, where you just, for instance, that you can't pay this month.
Pick the credit card over the house payment.
Pick the credit card over the house payment.
And what about the car payment? Where does that fall?
For a car payment?
Yeah.
It falls in a very similar situation with a credit card payment. You lose less points. For a credit card, for 130 days late, you're probably losing about 10 to 15 to 25 points. But most of the time when you're looking for a car, they don't really care too much about late dates. They want to make sure that you can pay on time, your credit report score is great. But when you're looking for a home, as you know, late dates in the last 2 or 3 years, they basically is a no-no. Doesn't matter what your score is, you could have an 800 score, stellar credit, but if you had a late date in the last 3 years,
on a house payment,
that's definitely
the lender's nervous.
The lender will most of the time say no, that we can't do the loan because you had a late date on the mortgage.
So never be late on that mortgage.
So never be late on that mortgage.
Okay. Well, if I pay off, say, I pay off an account completely.
Sure.
Can I get it off my credit report then?
Oh, good question. A lot of people have this conception, like, I paid off this car 2 years ago. Why is it on my credit report? I paid off this credit card and I closed it off already. Why is it still my credit report?
Right.
So the credit report is basically your history. It's still going to have information for the last 7 years of your credit history life. So it doesn't mean that once something has been paid off, it's going to be deleted from your credit report. So you'll see items on there that's been paid off 2 or 3 to 5 to 7 years is when it's supposed to fall off your credit report. Most of the time it does not. If it does not, then what you want to do is write to the bureaus and basically explain them, oh, this house has been paid off, this credit card has been paid off. But there's not really any reason for you to take off take off accounts that are in good standing.
Okay.
Because they're actually helping your credit report. Maybe you want to write a letter to the bureaus after the 7 years if there's accounts that you want to take off which are derogatory, which you had lates on. You had a car that you had 5 lates on, but it's been paid off now and it's over 7 years.
Okay.
And those are the ones that you want to write in and have them deleted. But otherwise, anything else that's in good standing, having it on your report, it's not going to hurt you.
Not a big deal.
It might even help you more.
Okay.
Because now they see the history that you've had with the report.
This is like a puzzle, Johnny.
No, unfortunately it is. They want you. This is their secret recipe.
It is.
They're not going to disclose how they've come up with their score.
Right.
But from years of experience and basically from the system itself, we understand what they need, what's necessary, what's needed.
Right.
But yeah, it's like a secret recipe that they hold dear to their heart.
Yeah.
That they don't want us to know how really the whole algorithm works on with the 3 bureaus.
No, I feel like it's the credit reports are like behind the black curtain. You can never really see them or meet them or know what's going on, but they're putting out something.
But yes, exactly. But we need them.
Yeah, we need them.
Unfortunately, for everything in our life, from buying a car to refinancing a house, and a lot of people don't even realize that even when you buy car insurance, they check your credit report to see what your premium is going to be.
Okay, now you just made me think of something else. I know when, well, I've heard anyway, that if you run your credit, a lot of times it brings your credit down.
Exactly.
What's the story with that?
So a lot of people do shop around. For instance, when you're buying a car, you want to shop around, you want to get the best deal. So yes, it's true. When you run your report, you do lose points. You lose about from 2 to 10 points every time you run the report. But you have a 30-day buffer. So what I mean by that is, for instance, let's say you're shopping around for a car. You go to Honda today to shop around, and they run your credit report. Then you're looking around for an Acura dealership or whatever that you're basically shopping around. So today, I run my report with Honda. So I'll lose about 2 to 10 points. Let's say I'll lose about 3 points today. Tomorrow,
but 2 to 10, that's a big range.
It is. It's just because it depends on how your credit score is. If you're on the higher spectrum, let's say you're in the 750s range at that time, they run your report, you probably lose more. Let's say about on the 8-point spectrum. But if
you get penalized for having a better credit?
Well, because you have so much more to lose compared to
more room.
Yeah, more room. So it's not going to hurt your score, dramatically.
Okay.
But for someone who's on like this, 500 score, there's not really much for them to lose. They might lose 2 points. They might lose 0 points. But so basically, within 30 days, you can run your report over and over again, and it doesn't hurt your score again and again.
So you shouldn't go around on a Saturday to 5 different dealerships and have them pull 5 credits?
Oh, you can, within 30 days.
Within 30 days?
So like for instance, today you go to one dealership, and the next 25 days you can shop around at any other dealership and have them run your report, but it's not going to hurt you another 2 points each time.
Keep it all within 30 days.
Exactly. After day 31, let's say day 31 comes along and you want to look at another car dealership, and that's where you're going to lose another 2 to 10 points.
Okay.
So within 30 days, you have the right to shop around and not have your score affected, but there's a lot of inquiries on your credit report. Some lenders might not want to see 10 inquiries for a car, so they get kind of like concerned. Why is it, Johnny, you went to 10 different dealerships and you're still here? You should have finished buying a car by now. So they get a little bit concerned if you have too many inquiries. Inquiries are each time someone runs your credit, it shows in their credit report who's ran your credit report.
Now, what about home loans? Is it smart to go to different lenders to shop around, have them pull different credit reports? You'd
have a 30-day period
also. Same story as a car?
Same story.
Okay.
But most people don't shop around as much as when they're shopping for a home compared to a car. They'll go to many different dealerships. But yeah, you still have the 30-day window. Okay. You can go to different brokers. Most agents don't want to say that. Yeah. But it's something that the client can do if they're really looking to shop around for a loan or anything like that. But yes, they have a 30-day window to not have the score affected just because they've been too many inquiries in the credit report.
Well, you know what I always think about a credit report? It doesn't really matter what your number is until you want to buy something, right?
Exactly. Exactly. So people always, come to me. They'll come to me and they say, "Oh, Johnny, I'm really concerned about my credit." Yeah. And I'll ask them, what do you need it for? It's like, well, I want to, buy a house next year or refinance next year. It's like, okay, then Well, we don't, depending if they have negative items on their credit report, then we can help them restore their credit. But if they're not really planning to do anything in the near future, then it's not really something that they need to do.
Well, okay, two questions. What can I do to bring my points up, and how fast can I bring my points up?
So credit card debt is probably the fastest and easiest way to increase your score.
Oh, it is?
By paying off your credit cards, 30 days later, you can get your scores that you've lost back, especially on a credit card that you've had over 30% usage on it.
Really?
You can
1 month later, you're back in good standing?
Exactly. 30 days later, sometimes even less. It all depends on your billing cycle.
Oh.
So for instance, if your billing cycle ends on the 28th,
okay,
and you pay on the 25th, and it actually gets posted by the 26th. Let's say it takes 1 day to post. So by the 28th, the day that reports, it already shows that the balance is 0.
Oh.
But most people, it's too hard for them to say, asking for what their billing cycle is. They don't even know.
Well, yeah.
So we just tell them 30-day grace period. So they kind of like, okay, within 30 days, I'll pay it off. By the time the bureau updates their information, then now the scores has recuperated for what they've lost within those 30 points. I'm sorry, the 30% that they've used on it.
Okay. Well, it sounds like credit cards are pretty easy to recoup. What about car and house payment?
So make sure you want to pay those on time. You can't
how quickly can I recoup that? If I'm late on a house payment?
Good. I see. Good question.
Yeah.
So basically, every month, if you are being good, you're not having any late payments, your balance on your credit cards are paid on time, on average, you'll gain from about 0 to 10 points.
Okay.
So each month, on average, you probably get 2 to 3 points a month just for being good. You could get more points. So if you're on the lower spectrum, let's say you're the 500 range, and you've been taking care of your credit report, no more lates, nothing at all. So you'll get probably about 5 to 8 points each month. So you can slowly climb up that ladder to reestablish your credit. But for someone who's already in the 700 range, they're not going to get 5 points a month. They might get 1 point.
Okay.
They might get 0 points.
All right.
As long as they're doing everything,
keep at
it, not making any more late payments. Make sure the balances are 0. Not doing anything detrimental that's going to hurt their credit. They should have score increase every month.
Okay, now if I have something on my credit report that isn't right or isn't me or I screwed up, whatever, do I try to work with the credit reporting agency or do I call the person that the debt is with?
Well, most people will always contact the 3 bureaus first.
Right.
Equifax, Experian, and TransUnion. Unfortunately, by contacting them, they're going to have to verify the information with the creditors, the original creditors. It could be the Bank of America, Wells Fargo, your credit card loan company, whoever it is. So if there's any erroneous items on your credit report, you want to deal with directly the source first.
The source first.
The source first.
That's good info.
After that,
and that's easier to get a hold of the source than a credit. I feel like the credit agencies, you can't get in that door either.
Well, most of the time it's really hard to contact them.
Yeah.
And if you do, they don't want to talk to you on the phone. Well, they don't. It's not like they don't want to talk to you.
Not easy.
Because they don't want to. They want to verify who you are, and it's really hard to verify who you are on the phone. So that's why they have to ask you to mail in documentation, copy of a driver license, social security card, a utility bill with your name and address on there. So now you can dispute whatever is wrong. Because if you can call in, I'm Jane Doe, and this is my credit report is on, and negative information is on there. They can't verify who you are for them to fix it.
Well, Johnny, the good news is I think people get into bad credit and you're like treading water. You think you can't start swimming again. But it sounds to me with a little bit of diligence, you can recoup faster than we realized.
Exactly.
Good.
Some people think there's no hope.
People need to give you a call. It sounds like every little separate issue your company can take care of. So I know you really want to help people out. So let's tell people how they can get a hold of you.
Sure.
Yeah. I know Johnny Vu, you're the CEO of QC Credit, of course, Johnny Vu, and your phone number is 408-988-8181. Once again, 408-988-8181. And Johnny, thank you so much. I think people can take a breather. It's not as hard as it seems.
It's not at all. Jules, thank you for having me on the show.
Okay.
Thank you very much.
Thank you.